Welcome to Charts This Week. My name is David Linton. I run Updata, and we've got a lot of charts to get through this week. A lot of requests have come through in the last week, and keep them coming. I'm always happy to look at any charts you like, but inevitably I can't do all requests, but we've got a lot of charts to get through, especially in energy. A lot of you have been asking questions in energy. So first of all, I'll start with the US stock market. It's a great sentiment indicator for what's happening in financial markets, and I tend to use the S&P 500 index. It's the broadest based stock market index, and really probably the index that really matters. If the US market falls, most other markets are going to fall with it. So it's the chart that we analyze. And here we see the S&P. We had a very big fall on Friday, so we did fall off quite a bit on Friday, consistent with the idea of the lower lows and the lower highs. So we had a lower high kicking in. We'd be surprised this week if we do then go and make a new high. It suggests that it's all part of the downtrend. So we're expecting now, having had a couple of good weeks, probably to have a couple of bad weeks in financial markets. And here we see the daily cloud and the weekly cloud superimposed over each other, and it does show how this tussle between the weekly trend and the daily trend has been occurring, and we've been in that sort of range. Interestingly, we've bounced off the resistance mark on the cloud on the daily chart, and we're now coming back deep into this weekly cloud. So we are still bullish in the long term on the weekly chart, but bearish on the daily chart. And I know a lot of you struggle to resolve that idea, but it is very much about your time horizon. And in my Cloud Charts book, I do actually have a chapter on multiple time frame analysis. So I do recommend that you read that to get a feel for how you can deal with trends within trends. And the key thing about these clouds is that they are a roadmap, remember. So it's our roadmap for what's going on. And interestingly, the base on the market is about 900 points, and that's where we probably expect prices to settle in the autumn, when we typically have the September-October sell-off, the final jitters. That's where we would expect to find support. And we also see the daily resistance going forward, so we kind of expect that around the 1070 level will become resistance for the US stock market before we break out of that level in the run-up to Christmas, which is typically a bullish time seasonally for the market. If we look at the point and figure targets, you'll remember that this is really another roadmap for us. It's the 10 by 3 chart. We do have a downside target of 940. The 1270 target wasn't quite met, and you probably need to go to a smaller box size. This is the 5 by 3 chart, so it's a bit more granular, gives you a bit more information about what's going on. And here we see a downside target of 845, but we need a new low below 1020 to give us really an activation on that target. So until we make a new low, that target isn't activated. That's slightly more bearish than the cloud based around 900. Interestingly, we saw that a little 1125 target was met, but we are effectively in this range. This target would be negated, of course, if we rise above the high that we saw last week at around 1120. So really we are in a bit of a range, and of course if we are in this range, it's quite interesting because we've become a bit range bound. But we're seeing on Wednesday we did have a downside target. I've marked it with a W here. We did have a downside target of 1066 on Wednesday for the S&P. On Friday that was met, but we also on Friday with the sell-off had a new downside thrust of 1029. So this is the 1 point by 3 chart. So it does suggest from that big selling thrust there's more potential for the market to fall. And I know a lot of you have been asking me about how these thrust targets work. The key thing is you really need to read Jeremy Duplessis' book, The Definitive Guide to Point and Figure. It really is the only book on the subject. If you want to understand these targets, I was on a lot of trading desks last week where people are asking me to explain the targets. Really, you just need to read about them and how they work. It's too difficult in this short time to give you a complete overview. On the FTSE chart looks much the same on the daily and the weekly as the S&P, as we'd expect. Here's the 1 minute chart. We did have an upside thrust target of 5245, which we exceeded, but new downside thrust coming in last week. 5060 was the target, and then 4940 is the big downside target, so back below 5,000. But downside suggested this week, so really quite key. And looking at the DAX, this is the daily DAX chart. Quite an interesting chart because it's trending more than the FTSE and the S&P. It hasn't rolled over quite the same way. We do have some upside targets and some downside targets, but quite a bullish chart still on the DAX, bucking the trend a little bit. But obviously if the US market does start to fall off, then we'd expect to see an impact on the DAX. This is the Spanish market. The World Cup effect maybe has kicked in here. We see that we have an upside target of 12,600, having had big downside targets with all the fear that's built into the Spanish market, but quite interestingly an upside target that has been activated, quite unusual amongst European markets. So Spain has just got an interesting character to it in the last week or two after the World Cup. The Shanghai market, here we saw the upside target of 3475 met exactly on this upside thrust target. New downside targets 2575 was met, and now we've got new targets of 1500, 1425. Really about 30% fall off in the Chinese market is still on the cards based on this chart, so quite key. Looking at currencies, the euro, the big story this week is, can the euro break into an uptrend on the daily cloud? It's looking like we might well have seen the lows. We may not get to those parity targets that we have seen on the longer term charts. The daily chart does suggest that we might cross through. We're through on the price already this morning, but we really do need to see the lagging line getting above that 133 mark in the next week or so, or we wait a few more weeks and stay above 130. So there's a sign that we might well wander out and turn into bullish mode on the euro dollar. Here we see sterling, a lot more messy the signal here, a lot more choppy around the top, but quite interestingly sterling is through on the lagging line as well as the price. So sterling has made a bullish cross on the dollar, so it is leading the euro slightly. And if we look at the dollar index, we see here that the dollar index, this is almost the euro chart inverted, we're really just testing the cloud right now. So any further falls this week in the dollar would suggest a further downtrend is now due in the dollar. So starting to see some cyclical strength in euro, other currencies, dollar weakness coming in, so quite key. And of course the shorter term targets, these are almost out of date before we even look at them, because it's a 1 minute chart and it's really moving very, very quickly. We did have an upside thrust last week of 130, 130. We haven't quite made it to the new downside target of 127.60 this morning, but remember this chart is changing in real time. The euro is a very active instrument, of course, so you do need to watch these charts very, very closely for new price action, giving new targets. Absolutely key. And here we see also the S&P 500 index, just the 60-minute chart, and it does show how we are range bound. So again, you know, the RSI would be a good tool to use on the market, and I just throw that one in quite quickly. Here we see the oil chart, and a similar characteristic here, where really on the daily chart we've now been range trading for quite some time. You know, oil is really stuck in this range near the top here. It's what was previously a slight uptrend, now a slight downtrend, and we see that the 14-day RSI has been giving relatively good signals. One problem with the RSI is that we're not quite sometimes meeting the range, so you may need to either adjust your range levels or shorten your time frame in order to get signals. But when we are range trading, the RSI is the key thing to use. And here we see the 60-minute chart of oil, and again I've raised that level just to 35 on the RSI to actually be able to get the buy signals. But because we're slightly downtrending, we're not seeing the sell signals come in. Remember, if we're trending down, we'll get oversold signals all the time. So that's why you really need sideways ranges to be using the indicators. And again, the 1 minute chart on oil, downside targets, we do have a mini upside target which hasn't been activated at 77.40. The 77.40 target given way back here was met. We've got 82.20, but that's looking really in danger of not being met with all these new downside targets coming in, 73.80, 74.70, 71.80. Again, you need to watch this chart in real time because it will produce new targets with new price action. So at the moment this week, oil looks set to fall a little bit. That's it for this week. Until next week, happy charting. See you then.